We are live. We are live.
Good evening.
Hey, Wilhelm. Thank you so much for tuning in. Where are
Pleasure.
you? Where are you joining us from today?
Today I'm joining from Amsterdam, the Netherlands.
Nice. So first of all, thank you so much for your time. I appreciate our connection, and I'm learning always when we sit together, might be digitally or physically. And before we start, I would like to introduce you, and then we're gonna jump directly into it. Today, we're gonna talk about how are serious institutions actually investing in digital assets, and what does the next decade of finance look like? In this conversation, we sit together with Wilhelm Roth, founder and CEO of 265 Capital, a multi strategy investment group applying AI, quantitative research, and institutional discipline to digital asset capital markets. With more than a decade of experience in digital assets and years of operating across regulated financial instruments, Wilhelm brings a rare perspective from working with foundations, allocators, institutional investors, and protocols at the intersection of crypto and alternative finance. Together, we will explore how sophisticated capital evaluates opportunity and risk in digital assets, where tokenized finance and stablecoin infrastructure are heading, and how AI and quantitative systems are reshaping investment decisions. Beyond markets and technology, this conversation also asks deeper questions about sovereignty, freedom, ethics, and the human future. In a world of accelerating regulation, institutional expansion, and technological centralization, how do individuals preserve agency, responsibility, and mostly freedom? And the last topic is what role do faith, values, and personal conviction play in navigating the decades ahead? Okay, Wilhelm. Now, let's get started, my friend. The first block is about institutional capital and market reality. The first question that I would like to ask you is how do serious institutions actually approach digital assets differently from retail or speculative investors?
Yeah, maybe a bit like faith in finance, we also have a holy trinity, maybe not that holy, but main institutions usually try to look at your history, track record, how long have you been in the market, what has been your experience, the track record that you've been doing over the years. Second, they look at how much assets you manage. So it matters if you can handle a million or 50 million or a billion. There's quite sharp differences. And the last part, regulatory. So under which jurisdiction you're being supervised. Are you supervised? Are you registered? So those are the three core ones. They are usually the initiator to start any due diligence process by larger institutions. Also smaller family office. It's quite the ABCs of institutional approach to any asset, including digital.
Now, Wilhelm, for the ones who don't know you, how did you ended up doing what you're doing today?
Yeah, that's been quite a rabbit hole, to be honest. So I've been in crypto for over a decade. It feels in crypto we have a joke that time in crypto passes like in dog years. So it feels like 70 years legacy now. I've been in crypto when we still only had like Bitcoin and Ethereum started popping up during the block size debates. For those who don't know, that's the very much a fundamental governance debate that occurred in Bitcoin with regards to utilizing larger block or smaller block, what we have with Bitcoin today. And at that time, I got the realization that this is becoming an asset class. Even if it's not categorized as such, it is an asset class. The more tokens are coming. And what I saw is a unique proposition for my experience within the financial ecosystem to what we can structure. And I joined one of the first registered asset managers based in Amsterdam called Cyber Capital, who was a fundamental analysis-driven fund ran by Justin Bonds. Brilliant guy, built the company through and through, and we experience it from the entrepreneurial side of it to how markets affect and regulations can come together. We advised the AFM, so the Dutch regulators, as well, among other parties at the time that everyone were super curious what is ledger technology, what's blockchain, what's the difference between blockchain and crypto finance. After that, I joined Iconic, which was a high frequency trading asset manager, which gave a completely different kind of perspective, from fundamental long-term approach and so on, to a fast trader, the milliseconds of trade, hundreds of thousands to millions of trades, and then you dive into it from trading strategies and how to balance risk and how to package additional funds for sophisticated investors. And at the end of 2024, when we consolidated an M&A process between one of the largest broker here in the Netherlands and us as one of the largest asset managers in our field, I got a mandate from the Web3 Foundation, from Polkadot, to build an institutional grade investment group that we can then extend relations and business development for Polkadot with large institutions, which is a phenomenal journey where we're still very proud working closely with Polkadot through the changes that they're doing, while on the other side, building a robust investment group with fund management, trading desk, and coming soon, a venture arm.
Interesting. What excites you the most in the morning to wake up and pursue what you're doing on a daily basis?
The unknown knowns. This is an ecosystem that has no roads. We're building the roads. And as I mentioned, at the time I started, you could only do Bitcoin transaction in the most, pardon for the Bitcoin purists, but the most primitive ways possible. And now I can pay my taxes with Bitcoin. That's quite a journey, but the road to it means that your assumptions needs to be constantly challenged. What you're used from traditional finance, what you're even used as an entrepreneur, are not always the realities when technology and innovation meets finance and the journey through it. I always like to joke that this experience shifted the hair from the top of my head to my beard. And that's a bit of this market experience. But you learn both on the fly. It challenges you to think super sharp. And I love it a lot. It's the most exciting thing for a person like myself, and I think probably also for those who will consume this podcast, that your innovation, your creativity is being challenged, but on economic and structure side, which is fantastic. I really love it a lot.
Mhm. Where do you see the most potential in these new technologies, talking about Web3 and AI?
Yeah, this is, to be fair, it's both opportunity and a challenge, especially from a society perspective, because like every technology, it can be harnessed for good. For example, there's projects in third world countries that need financing, and their only accessibility to the banking sector is through blockchain. Some of the biggest adoption of crypto has occurred in Zimbabwe, has occurred in Argentina, has occurred in the deprivileged countries in the globe, because their access to the SWIFT ecosystem is impossible. Naturally, on the other side, you have, unfortunately, parties that utilizes the same benefits to do money laundering or human trafficking and other horrible things that we see being hedged more as regulators come in. But I find that blockchain as a technology is one of the best gateway towards the long-term evolution of having robotics and quantum computing, and it's a major critical step to reach those kind of long-term goals. And they hide in them fantastic potential for a next stage of our financial markets. I think a lot of people see that AI has a risk to take a lot of jobs. On the other hand, blockchain and the solutions in it, as well as the AI element on top of it, can provide new high quality jobs, but also free us to make better decisions. So those are kind of the best opportunities that I think for those out there that don't have exposure to, either you're a developer that is not in Web3 or curious about Web4 and AI. There's a risk of missing the train, as in the previous generation, people that developed on COBOL missed the C++ revolution. It's always important to try to be a bit ahead of the curve, even if you just learn it, and education is everything.
I would like to scratch on the topic that you mentioned. I mean, there is still a wide audience in the world who does not understand or does not use Web3 and blockchain or cryptos. And there is this famous quote from Charlie Munger, who was a vocal critical of cryptocurrencies. I would like to quote him. While he said that the underlying blockchain computer science was a great triumph of the human mind, he also said that crypto itself is an investment in nothing. It's worthless. It's no good. It's crazy. It does nothing but harm, and it's antisocial to allow it. He said it's useful to criminals and should be banned. How do you assess the positive social impact of the underlying technology and the crypto assets themselves?
Yeah, that's a brilliant quote. And I still remember at the time when I heard it for the first time, and I was like, okay, well, we actually heard it before when the banks globally moved from the gold standard to paper money. The main worry was, well, what is this paper? I mean, you print something for a few cents, and it's supposed to represent some sort of a stored value out there, and nobody doubts the role of cash. Now, we can be definitely critical when you look at kind of the evolution of transaction, because I don't always like to use the term money, but when you look at the evolution of transactions, if you showed a Spartan money back then as gold and silver, he would say, well, where's my cow? How are we doing this transaction? Even further to the early Mesopotamians. And then later on with the Roman and the gold standards, and after gold standard to fiat currency in cash and naturally coins, etc., to what we haven't even kind of skipped, the digital currency before crypto. So the movement to the euro system as an example for the European area. So since I'm in the Netherlands, this is the easiest to approach, where wholesale bankers diminished the amount of exposure they had to gold or the amount of cash they even have on their books, and started using digital money, what we see in our bank account. There's no real equivalent. I mean, in the Netherlands, the average is 11% of every euro is actually real. And then now with crypto. So I'll take the criticism, but value in money is the faith we put in it. And naturally, it's been constantly challenged. It's been challenged in traditional finance when looking at how government spends our money and where is it coming from, and the risk of being enslaved to debts, even as nations, to, yes, in crypto, just as in fiat. That's the same risk. And unfortunately, this ecosystem needs to keep on proving itself that is better than the monetary system we have inherited. That's on us.
Thank you so much. I'm a big believer of the potential of human evolution. Might be AI, might be Web3. Conscious people use technology in a conscious way. Stupid people will use technology in a stupid way. So it depends on the person behind the technology. And there are always risks and potential and possibilities in any era. Wilhelm, I would like to go back to institutional capital and market reality, because we have the danger that we're going to shift over to to a deeper conversation. Now, two more questions about this area that I would like to ask you is, number one, what separates institutional conviction from market hype?
Yeah, I like to say it's the proof of capital. In our field, there's this story about proof of work, proof of stake. There are more technical governance perspectives. But put yourself.
For the ones who don't know what is proof of work, proof of stake, please explain it in a in brief?
Yeah, so it's in a very quick manner with regards to proof of work. With Bitcoin, everyone knows miners. They work and compute a lot just to be able to prove the work that they've been doing, to be able to kind of discover Bitcoin at the end of it. And you have proof of stake, which is your participation exposure and your risk exposure to the project itself, kind of a security measurement against large institutions trying to collapse, let's say Ethereum or Solana or Polkadot and others. And that's by your own participation. With regards to proof of capital, which is something that you see institutions use, is that institutions at the end go through a due diligence process. So what they do is that they get all the hype and excitement and they talk to founders and they get even more bullish. But at the end, when you go to all the road shows, you're AI blockchain and therefore check. But when you go through that process, they want to see that the founders are actually anchored to the project. So they're not going to just short their own project and disappear. They want to see that there's a real already MVP, so a minimal viable product that is running with some cash flow. And then as critical as mentioned is the proof that there's actual larger sizes of capital and money and trusted names that are standing behind you. And for example, let's take 265 Capital. We had a backing with Polkadot. We got the mandate from Polkadot. It gave us kind of this NBA level support that allowed us to connect between larger institutions that already know Polkadot and know the founders and know the longevity in the industry, to actually have faith to go and execute and have re-engagement with the dot ecosystem. And at the end, those are the main parts of institutional entry into the field. I know it's not sound like the most exotic or the most exciting way to enter. We always love to believe that this is all about elevator pitch that is so that you go in. I think that era is still there for the curiosity, but you will always have to pass through the analyst, and they pay a co-work. The executive can be interested by an executive summary, but you need good analysts that are able to actually give you the de-risking to take the director's liabilities to actually put money behind projects and then go with them for the scope of time you want.
Thank you so much. One more. Where are you seeing the most sophisticated capital positioning itself today?
Yeah, I think you actually see quite a move in capital, and I think that if you look at our ecosystem, crypto as a whole has reached the point that there's no question if it should be on your portfolio. The question is how much. So that is a big change that happened. On the other hand, you see this implementation of very sophisticated AI models and language being implemented into financial instruments, which is being heavily developed on the financial markets. And if you look at deep tech VCs, if you look at larger hedge funds and PEs, their eyes are in this intersection of the assets they know, the technology that they don't know, but they're ready to develop and build it together. And there you'll see a large concentration. We see it in Asia with a lot of AI meets finance. We see it a little bit here in Europe. We're very proud to be leaders in this field, and actually in the States. I think if you're a sophisticated investor and you've seen your portfolio very sensitive with its exposure to, let's say, the S&P 500, because every Monday and Thursday we have a different war coming up. And on the other side, gold and commodities, we've seen a happy end of last year, but a turbulent start of the year. Oil with the war in Iran, Middle East, Venezuela, Ukraine. There's a certain point that you have to ask yourself, why am I overexposed into specific parts of the ecosystem and I'm not utilizing AI and additional, for example, HFT and agents and so on, to be able to maneuver between those different, what we call universes of assets. And there you see the sophisticated investor starts to follow that trajectory.
Super valuable. Thank you so much for sharing. Entering the next topic of questions that we gonna start is sovereignty, regulation, and financial freedom. And the first question that I would like to know from your side, Wilhelm, is we are entering a period of increasing regulation and institutional oversight. Where do you see the healthy balance between protection and control?
Yeah, it's interesting way to put it. Indeed, I remember when just starting in crypto, and I had my first sessions with the FM and tried to explain that the critical balance between regulation and strangling innovation. And I think that is the critical balance that we also find in our own lives between security and freedom. And when I look at regulations now occurring globally, we're lucky that we still have quite a lot of openness. We've seen it with MiCAR in Europe, where there were, first of all, very harsh white papers, and then through consultation, it's softened a bit. And there, I see that the regulators from their side, I think, need to be a bit more fast in the way they modify themselves to the movements of the private sector. And it's not because they should de-risk or allow for a low barrier, but it's because the world is moving so fast. AI upgrades, the role of crypto and Web3 have accelerated processes. And the regulators have a duty to be much faster than they have been and much more open-minded, while putting the priority of the protection of the consumer, whether it's be on the retail side or an institutional side. And we're lucky the way the regulators have been doing it so far. So I'll give them kudos when kudos is merited, where they pretty much did a lot of tests to begin in their own kind of small chamber consultation. Then they gave regulations mainly for institutional side. Like, for example, my company is mainly relying on institutional grade regulations and policies, which we, for example, we don't sell to the average Joe, because it's the regulations there are still not fully covered, and it will take quite some time to get there. And it's done literally to protect those that cannot afford to lose 100,000 euro, for example. That's a lot. For some people, it's their pension. So they cannot afford that risk. And that's the sensitivity of the regulator. So again, it's finding this balance between freedom, between innovation and regulation. And I think for the most part, a lot of regimes find it quite well. Switzerland, I have to say, excels in it. The Netherlands is trying, but we see it globally. All regulators find it quite an interesting challenge that they take straight on.
Beautiful. Thank you so much. Wilhelm, many people worry that financial freedom may shrink as systems become more centralized. Is that concern justified?
I would say yes. I mean, at the end, it's the trade we accepted for ourselves. It's a yes and no. We as humans have a responsibility as well, what we accept in our lives. I think 15, 20 years ago, how many of us felt comfortable that there's cameras in every corner of the street, and that there's camera in our house, and there's a phone that's listening to our call while it's technically shut, and that we go through the airport and now we can just use our fingers and an ice screen. All of these things, if you talk to us 15, 20 years ago, would have been very, what are you talking about? This is Orwellian almost. But we accepted the trade of security for freedom, and vice versa, or the sacrificing our personal freedoms for the securities and the ease that we go through markets. The example with regards to crypto, I think one of the biggest risks, and that's something I think a lot of us in the crypto ecosystem, both from the largest institutions to the smallest, is the role of CBDCs, the central bank digital currencies, and the way that they're tracked. And as I mentioned, it's all not black and white. We have too much dichotomy in the public conversation this past years, but there is semantics in between. On one side, it's great to know that nobody can launder money with the same ease as they could with the paper money or with transporting commodities and so on, and everything is trackable. On the other hand, I think that if you're getting to the risk of what we see in certain countries with credit scores and social scores, and then you can lose your passport and other privileges, there's a very, very thin line that to hedge it, you need good people behind those positions that are able to prevent this slippery slope. And I think we need more of them. I'll just put it that way. This is something that is still a struggle. I'm part of the Digital Euro Association. I know we have a lot of good people there recommending how to avoid and how to do it correctly with regards to CBDCs in Europe. But yeah, it requires a lot of talent to protect our freedoms.
What comes to my mind is the following, Wilhelm. It's never from 0 to 100 process. It's always like a stepwise, right? If as you said, 50 years ago, if we would have thought about the things that we are doing today, people would be shocked, right? But it happened in pieces, always in small pieces that people would digest and accept. And you said something, I think, and that's the crucial thing. The people in charge are these people that we can trust. And that's the big question mark. Are these people acting out of goodwill for humanity, or are they acting out of evil, ego, greed, power-driven? And I think that's the most crucial question behind: are the people who are leading us, who are in charge, are they good or bad?
I mean, I do think, and there's this saying, right, about good intentions, right? It's, I think it's a mix. I mean, at the end, a lot can be also dampened by just bureaucratic wish to push things that they worked on. Sometimes it's without even too much thought. We had a project, it needs to be done, and then we need to push it forward. And then you pay the consequences afterwards. And I remember in the past when regarding to full AIFMD, so for those who don't know, that's a way to get a license for hedge funds in Europe, for alternative investment fund vehicles. And there we said, just treat us as equal to anyone else. And then don't up the bar, don't lower the bar, just treat us equally. And we've seen a lot of this kind of back and forth that have occurred between the private sector and the regulator. And then we said, look, it's better that we do it right the first time than have to spend money on lobbyists for the next 5 decades to correct it. And I think for me, the most critical part, and that's something that is very close to my heart, we talked about it in the past privately, is the future of pension funds. I think a lot of us are quite aware that we probably don't have a pension with the risk and the changes that are happening globally. And the stress economically that are happening from a pension all the way down to the smallest manager. That squeeze is something that I see as a real challenge for us in the financial sector to work with the public sector to find a solution. But if they're the right people everywhere, it's a mix. It's a mix, and fortunately, unfortunately, this is something you only learn when you meet in person with people. And I can say on a positive note, because I don't want it to sound like, oh, we're surrounded by this gloomy, doomy storm clouds. There's phenomenal people, both from the private sector and the public sector, that want to drive healthy change. And a lot of times it has to do with how we translate the common good into the pathway there without losing or going more left or right. It's the solution I think that a lot of us probably look for can be quantified as a utopian vision, but we need to build a real world road there and a way to communicate with each other to get there.
Let's put ourselves into the situation. We are an individual or a family that wants to preserve sovereignty and freedom, and optionally, while still participating responsibly in regulated markets. How can they achieve that, in your opinion and your expertise?
Well, I think the basics is actually, I don't ever see the difference between a family to a large corporation. The main difference between the two is just how you look at yourself. A corporation looks at itself as a corporation. They have a treasury, they need to manage it, they distribute capital across different assets to make sure that they have some return from it. Now they can deploy 1 billion Swiss franc or so, and a family can deploy 1,000 franc or euro. But the family needs to learn that it's actually its own wealth manager. That money is money that is critical for their long-term perspective and the risk they are ready to accept. If you are more security driven, yes, please don't go into high risk investments if you're not going to be able to track them. There's a reason you can have access to commodities or to forex markets, to bank savings accounts, and so on and so forth. It's all about looking at yourself as your own wealth manager. What fits you best? And it's not always easy, which is why for me, for example, for the past 7 years, I provided 2 hours pro bonos for young startups to come and talk and get guidance so they can avoid things I made a mistake with. And I think for a family, especially during this very volatile times, it's critical to actually try to save more, to try to put it in more conservative avenues. And I'll just give a little bit of a disclaimer, since this is not an intake, so I'm not allowed to give financial advice. Naturally, on one-on-ones, more than happy to discuss more in depth. But I think that this is something also a lot of people feel in their guts. Things are more as volatile. Traditional finance is just as volatile as crypto used to be, and that requires its own reaction, which tends to be more on the conservative side.
Wilhelm, do you think that digital assets increase freedom or eventually become another layer of institutional control?
Yeah, it's both. You definitely get much more freedom, and you see it from cross jurisdictional transactions. And in Switzerland, we can even establish our companies with Bitcoin, and you have quite a lot of freedoms to what you want to do. I think especially for those who are more on the cutting edge of innovation, if you look at where you entered crypto 10 years ago to where it is now, you definitely, even with the ups and downs, you're kind of set in profits, kind of in the current state of markets. And on the other side, again, the implementation or the integration, how crypto, at least for the financial markets, how it's been brought in, will become as part of what we today accept as how we use IDs and driver's license and so on and so forth. Like, for example, a notary. It's a good thing. You can establish your company, you can stamp that it's real, you can vouch for it. On the other hand, from a tokenization perspective, yeah, it's fully tracked. Everyone can see literally everything that you do, for the good, the bad, the ugly. I would love to give you a dichotomy of answer there, but it comes together. It's a bundle. It's almost like accepting the sweet and bitter, and just making sure that you stay more on the sweet side.
I just see one of the questions from the audience that I would like to pick up is, how do you see the future of USD and S&P 500?
Oh, well, I think that as long as we have the current administration in the US, we, at least from a US dollar perspective, I think we'll keep on seeing it strengthening. There's an incentive behind it. There's a lot of the actions that are done on a macroeconomic perspective, and the drive that we've seen with the S&P that seems quite positive, and in the interest of the administration to keep protecting. We've seen a lot of it even in the negotiations with Iran or Russia, or now what we see with Cuba. But naturally, again, there's also been the claim that we are in the end tail of the cycle globally, and next year could be a very, very hard year. But in that perspective, as Trump would put it, the markets are amazing. You cannot get any better. So far, markets don't lie, but markets don't show reality. That can be a gap.
And for the ones who ask themselves, what is the risk of zero or close to zero, even with established coins and tokens like Bitcoin and Ethereum?
I mean, I would assume the reference is more for the chance that it goes back to zero, I reckon. I think that it's relatively low, but I'll separate two parts. One, if I look at Bitcoin and the accumulation of Bitcoin, I don't see it coming. I think there's more risk towards the end tail of the availability of exploring new blocks, and from there testing the assumption where you have at that point more demand than supply, and that's the reason I don't really see Bitcoin hitting zero. With regards to altcoins, yeah, that's a different story. I mean, we've seen what happened in the last run. I still don't think for the larger, more mature altcoins, some of them might be nicknamed the dinosaur, dino coins. I don't see them hitting zero, but they definitely have not reached any of the potential that a lot of us have assumed in the crypto ecosystem, at least from a financial perspective. I think when we look at the markets, there's still quite heavy volatility happening on both sides, which keeps a lot of larger managers, especially in currently at least the state of both accumulation and a drop. We've seen it with BlackRock with its changes quite a lot. They do massive buy, then they short. I don't see it hitting zero as long as we're still with this volume. So the main weight I put behind it is the institutional adoption. We got to such a size and scale that the risk of zero it's never zero, but it's not high. With regards to, we might call, and apologies for the nickname, I don't want to say any dirty words, but S coins, I'll keep it at that. You can, I think, elude yourself. Yeah, they are the same risk as we see with penny stocks on the stock exchange. So it can be the biggest tokens, since the Trump coin, but we've seen where that landed. So I think that where there's speculation, there's a very high correlation to zero. But it's up to sophisticated investors to also do their homework, look how long companies are in the field, if they actually solve proper struggles and questions and queries, and who stands behind them, for how long they've been standing. How they manage their treasury is just as important as how they invest in their tech. So with that regard, it's I think that, again, chances are low depending on which side of the token you're at.
Thank you. One more. What are the genuine use cases for mainstream mass adoption of crypto and blockchain? And then, more important, why haven't they happened yet?
Yeah, so maybe if it helps, I'll give an example of one that worked and one that had hopes to it but didn't work, or kind of fizzled out. So a good example would be on the work side. Chainlink. Chainlink came to be, as at the end, it's an oracle. It literally there is a glorified stamp that says this is so, and therefore it's in the other block. It's a glorified notary to a great extent, and we've seen it with how some of the larger institutions utilizing Chainlink as a form to prove what is actually occurring, as a much faster, more efficient way to do it. So in this case, you have a real-world use of a great solution that is specifically utilizing peer-to-peer technology to get real-world usage. And that's real-world usage both from adoption by larger institutions. I invite anyone to look towards Chainlink Labs and see the amount of cooperation they have with large organizations like Google and Microsoft and others. And that is a fantastic example on a project that didn't work. And I mean, you can look at a project like IOTA. IOTA back then, for those who remember, was supposed to be this IoT solution that we'll have in every car and in every phone and in every device, and it turned into a nothing burger. And there's a lot of reasons for it: team pivots, changes in governance, and so on. But it failed. Does it mean that there's no need for IoT devices? Well, in the world of drone warfare, I can tell you that there is enough IoT devices to go around. So there is still the feasibility, but it hasn't been well executed. So those are the two. And by the way, apologies to my lovely colleagues from Polkadot, but I'm biased and I prefer not to be biased when I give examples. So it's not for lack of wish.
Thank you. Wilhelm, let's enter my favorite topic of today. It's called faith, values, and leadership. Faith speaks about stewardship, responsibility, freedom. Has faith or spiritual conviction influenced how you think about money, markets, and leadership?
Yeah, 100%. I mean, while we're talking, I'm getting quite a big amount of sun into my eyes. I hope it's not a sign there. But yes, 100%. I think that having faith is having a good compass in how you do your business, your ethics, your ability to carry through good and dark times, while having a strong conviction that has the fundamentals to walk on. And maybe good examples for it. I think that we all have points we're struggling. I've seen it with my previous shops. You have a good year, you have crypto bear markets. You see it if you need to fire people, you cannot grow. You feel like you're at a certain bottom, and faith provide you a strong bedrock to be able to not fall completely, to have the courage to dare again. And I think everyone in some points in their life experienced this unexplainable moments where everything aligns and suddenly it goes. And I think that's at least for me, I've experienced it quite a lot. And I think the thing that I took the most out of it is to keep to your ethics, whether it's through volunteering, even if you don't have time, to donating, even if you're short of money, and in supporting both your teammates, your community, even your competitors. I just had meetings with competitors of ours earlier today, and you talk more from how do we cooperate, and that comes to ethics, it comes to faith, it comes to perseverance, and that I think is our own Via Dolorosa to take.
Old economy is all about competition. New economy, it's all about collaboration. Leads me to the next question. Do you believe that modern finance has lost somehow a moral or ethical center? And if so, what restores it? Thinking, let's put a picture in our mind. I mean, we all saw the Wolf of Wall Street, right? And what happens at the Wall Street. And yeah, you have this picture of people who are purely self-egocentric, money-driven and power-driven. And so, yeah, how can this be restored? And do you believe that faith is missing in this area?
Maybe I'll say something that is not the most popular. I think that the failure occurred on both sides. I think that when it's easy to take the financial ecosystem and industry as a whole and make a potential scapegoat out of it. I think that a lot of time we forget that there's also the Holy Spirit is also moving within people within the financial ecosystem that have the best interest in heart for all of us. And you know where we've seen it? We've seen it exactly with the example of the Wolf of Wall Street. At the end, the justice system hit hard. sin was not gone unpaid for. And there's those of us both within from the that manage portfolios all the way to the regulators that think about the average Joe all the way to the large institutions. Now, no doubt, there's been, of course, issues of manipulation in the markets and that come from the lower, I guess, side, the other side of the financial ecosystem, and there our responsibility to be a light. And the way that we are able to gear that light is by um, doing it ourselves. You need to prove your example. You need to speak loudly on how you do business. And I think that there's a change. There's a beautiful, beautiful change that is happening in finance, specifically because that's what I experienced the most, where we used to be very feudalistic and we did not cooperate, and it was a very backstabbing kind of an ecosystem by large, to a point where we try to cooperate. We share values. I want to do business with people I like and not people I have to. And if I can find people I like, it's easier to build and grow. And I think that this is a very important trend that is occurring in business as a whole, that we want to find people that share our values, share our faith, share our convictions of a better world, and the knowledge that we want to provide our kids and our grandkids with a better future, as was supposed to be promised to us. And when you find more of these people, you'll be surprised how many that might look tough in a newspaper or behind a reality show that actually share a lot of our convictions. And the important big thing is not to be silent. And that is, I think, the weakness of the millennial generation. We love to complain, but we don't talk honestly. And if you don't talk honestly and you don't bear your heart and faith and ethics, then yes, don't be surprised that those that do will carry our realities into a place we might not share. So it's important to be brave, voice our views, and cooperate from the community all the way up to the corporation. And that's the best way to do business.
Wilhelm, what do you believe? Is everyone made to be an entrepreneur?
No, no. And I'm not saying it with any judgment. So it's very important for me to say I'm one of the most non-judgmental people you can find. That's what brought me, I guess, to finance. But the reason I'm saying it, maybe touching back to what I mentioned earlier, there's this balance, I think, in people between security and safety to freedom. Some of us derive our freedom through having security in our lives, 9 to 5 jobs, secure, you know how much you're making when you're home, gym, dinner, routine, back. And then you prioritize that routine, that security, that safety net over taking major risks. Now, be able to take major risks, it's not for the faint-hearted. I can say as a serial entrepreneur, I have different portfolio companies under my umbrella. I love this. But I've seen it also from working with people that assume that they can be very entrepreneurial, that within the first year they can burn out of them. Not because they're not good human beings, but because they're not entrepreneurial. And that's okay. And it's important to have this self-discovery. Entrepreneurs are people that, when I ate instant ramen for the whole day and thinking, well, that's not the best. But then I fed my brain with the work I've done. I can at my last penny because I cannot imagine giving up just before I reach that diamond, and that perseverance is something that entrepreneurs have in buckets. The minus is also that a lot of time that causes a lot of stress, because if a company goes down because of the entrepreneurial perspective, that's the other side of it. And that's why I always find the beautiful marriage between having good people in your team and surrounding that are safety and security driven, and those around you that can be the dreamers that you need to lift you up and carry you forward. Only together it creates the right trajectory going forward. I think that's the balance.
Leads me to the next question. Look at social media. Look how sexy it's positioned to be an entrepreneur. You know, it's the easy life, the traveling, the freedom. But social media don't show you the tough moments, the break you moments, the rock bottom, the sleepless nights, the pressure, the stress. And going back to faith, I was watching a preach from Bishop Marmari last weekend, and he mentioned that Jesus was the poorest human who ever lived on earth. He was spiritually rich, but financially, he was the poorest of the poorest who ever walked on earth. The beggars on the street have sometimes a cent or a dollar or they get money, right? But Jesus had zero in his pocket. And when he was asked about if people should pay taxes,
Yeah, pay what
and
is
then
to
he
Caesar, it is to Caesar. And
correct. And he said, give me a dinar because he didn't had one dinar, right? So yeah, there is this some I feel there is this misalignment in what success means and what wealth means. And yesterday I was in a restaurant and I meet this 19-year-old waiter. And because I love to inspire young people, I started to talk with him. Hey, what is your passion? What is your purpose? What do you want to do in your life? You want to be a waiter? What do you want to do? And he was like, I want to become a hedge fund manager. And I was like, okay, why? He was like, because of money. And so I just feel we have created, especially through social media, this definition of success and entrepreneurship that is unhealthy, that is not real. So my question to you would be, what does success means to Wilhelm?
I mean, I think I'm already quite successful, and the reason for it is that I came to peace with myself first. I love to say that there's this known saying that the amount of exploration we've done in space is not even a tenth of it we've done in the ocean. But how many of us can say that as much as we explore the oceans, how much you explore your own soul? How many times you've sat really with yourself and being honest to yourself on where you are, where you've been, challenge yourself boldly, maybe in my case easy, and really try to drive to understand the essence of you. Because if you don't know who you are, you will find it really hard to chart a vision for your future. Then you'll latch into what the media tells you. The media might tell you is reality shows, money, and whatever. What makes you happy? What is your driver? I've seen the happiest, poorest people in the world, and the most depressed, rich people in the world, and vice versa. And at the end, a core of this is with literally the lack of knowing who they are, which is, ironically enough, you're the closest to yourself, but you're the least honest with yourself. And that moment that you switch that mind and you're ready to challenge yourself in a very stoic perspective as well. So you don't need to be a flagellist, right? That there's no need for that. But it's critical to actually explore yourself. Like, for example, I'm an entrepreneur. I love stress. I hate stress. I mean, it comes together. I know that you can push me and I can lose everything tomorrow. I'll build everything back up and more. This is just my nature. This is what drives me. Now, if you want to punish me, yeah, send me to be an accountant at some of the big four, and yeah, I'm done. That's not for me. But for another person, that's perfect, and they'll feel more punished on the risk of what can happen tomorrow. You know, the unknown is a bigger fear than the known, and vice versa. So I always recommend spend time with yourself, truly. Explore on the good, the bad, the ugly, the happy, and when you do, the rest will start to follow. You'll see it very quickly, and that's why I say the most successful people out there are those that know what they want.
Last question about faith before we enter the last topic, and that's a deep one, Wilhelm, because that's the beauty at the House of Trust live stream, because we can talk freely about all the different topics. When you are a faithful Christian and you read the Bible, especially Revelation, the last chapter, you're gonna see that it's written about the mark of the beast. That we're gonna live in a time with we're gonna have a lot of false prophets. Look at social media. we're going to have a world where you can only function if you have the mark, and that there will be wars among nations and destruction. And if I look outside with my humble view and eyes, I see many things are happening right now. So I'm wondering, are we living in the end time? And it's not about fear. It's not about scarcity. It's just about recognition and to recognize. And so how much correlation do you see with the advancements of CBDC, digital ID, a scoring system, restrictions? I mean, COVID that showed us how far a state can go and put you into your home, and restriction. How much correlation do you see between what is written in the Bible and what is happening currently in the world?
Yeah, I think that there is no doubt, at least from my perspective, that we live through times of turbulence. There is just no doubt. And as I mentioned earlier, this is where our responsibility as from a sole individual to a family to a community to corporations to to keep the devil away, and that's not easy. It's not everything in your control, as you said, to a great degree. Yeah. We see the changes that are occurring globally, and there is no doubt that's one of the biggest challenge, both for faith and yeah. I would just keep it short and say it's not an easy time, and it's definitely down to us. I would love to dive much longer, I think, into it, but I think we have a responsibility, at least what I see for myself, that what I see as companies, that we are at least aware and we can act on it. We can give more to charity. This is something I believe very heavily in. We can take responsibility and guide our families. We talked in the past, build our kingdoms in the shape and form that also connects to revelations and how to guide ourselves going forward, and inspire others to do the same. At the end, this is a critical element of our duty to keep to our ethics and inspire others to join. And that comes from how we manage our bank account to how we are guiding others from making mistakes in companies or relationships, and how we are keeping together as a community.
So true. I mean, what if entrepreneurship is part of the solution that we need, right? If we humans develop solutions for challenges that we see, and we genuinely act out of a genuine heart who wants to do good, then we can disrupt industries, we can disrupt current states. So I think entrepreneurship is part of the solution that we are seeking. Leads me to the question, Wilhelm, why have you decided to become a mentor in the School of Impact?
Yeah, I think it's pretty much very well attached to what you just mentioned. I think that, like, I've been a mentor to young startups for now close to a decade. I've been giving 2 hours pro bono twice a month to young startups to guide them, to make sure that they're not doing the same mistakes I've done in the past and others do, to make sure that they're building resilient businesses. And I find that, just like our conversation this past hour, and thank you very much for having me. And it's this mix of business meets faith, meets conviction. And if I know that I can be of aid for anyone in both the growing community and beyond, and know that I left this impact, then this is one of the biggest privileges that I have the pleasure of doing. And I think that for the time we've known each other, we've seen what a fantastic community is being built around, and being able to be a point of mentor, I think is quite a great privilege for me to take.
I appreciate you, man, and thank you that you are willing to contribute time, energy, and share your wisdom and experience with the next generation. So kudos. Last question for today, because we are Swiss and we are finishing on time, is, Wilhelm, if we sit together again in 2035,
Yeah.
And what will have surprised us most about finance as society? What would you say?
How much doom and gloom we've seen to how much it actually occurred. I think. I think that we've been in the past for so many again turbulations, periods of insight and revelation that um, got us closer. Let's just put it this way. But the chasm was not as dark as we assumed, and I think that there it connects to my earlier points. It maybe these times of turbulations are our wake up call to unite and act and make sure that we don't go into that dark abyss, but we elevate everyone together. And therefore, yeah, I might be called as an optimistic person, but I think that this is the journey we're heading to. We'll be surprised by how much we are able to, yeah, to the things we're been able to avoid by actually being brave now, and that I think will be the biggest surprise.
Wilhelm, man, thank you so much for your time. Thank you for the 10 that you took during this call.
Oh,
With the
definitely, yeah. We've seen a bit of the movement of it from the bottom up now. I feel
I
almost,
wish
yeah,
I
yeah,
wish
highly, yeah, genau.
I wish I would get the sun during the call. So yeah,
Yeah.
man, thank you so much for your time. Looking forward to see you involved in the as a mentor. Looking forward to meet soon in person back in Switzerland. I wish you all the success. And if anyone wants to reach out and know more about Wilhelm, you can contact him directly on LinkedIn or just ask me, and I'm going to make an introduction. And that's all about good people with good intention create good stuff. We are here to protect each other from waste of time and energy. If we introduce each other, then it's not just a match; it's a super match, and that's the value of a trusted community. So thank you guys for tuning in. Wish you a blessed and wonderful week. Don't stop to bring light into this world, to disrupt, to build, to be creative, and we see us next Tuesday.